Welcome to Real Estate IQ Wisdom for Smart Moves. We will explore the insider secrets tailored exclusively for Silicon Valley home buyers, sellers, and investors, arming you to conquer the unique real estate landscape. Today, we welcome Ami Shah, the founder of Ami Shah CPA.
Many high earners in Silicon Valley overpay in taxes. Without smart planning, equity like stock options and RSUs can trigger surprise bills. Property owners face rising taxes too. Traditional accounting just isn't enough. Strategic guidance is key. Our host today, Sharad Gupta, is a real estate broker in Silicon Valley and brings a wealth of live and professional experience to his role as a podcast host.
Thank you so much, Amy, for showing up to our podcast today.
Thank you, Sharad, for having me one more time.
These days, more and more people, they are moving towards short-term rentals like Airbnb, and there are some other short-term rental scenarios you can do, right? What are some tax risks which you see with these short-term rental properties?
Okay. So most of the people, they think that the short-term rental is tax efficient. But I would say that it's an investment decision that you want to make it, comparing the ROI on both the side. Whether you want to do a long-term rental or short-term rental, it should not be a tax play. It should be an investment play. That you have to truly see whether you are making the benefit on the Airbnb or so. The tax rule says that, if it's a short-term rental where the average occupancy is less than 7 days, then it's considered to be an active loss, and you can offset it against your ordinary income. Only on the federal side. California, it doesn't allow even that. So you want to see whether you're considering the tax advantage that a short-term rental has, still, all the other fees, the Airbnb fees, the cleaning charges, and all that stuff that gets into the picture while you do the short-term rental. You want to compare the expenses versus the tax benefit and then make a decision.
There are many homeowners, especially in this market, right, or in Silicon Valley, who have tremendous amount of equity in their homes. How can they use some of the tax rules to smartly reinvest that equity in the market?
That's a very good question, Sharad. And a lot of people here, because of the appreciation, they have so much equity in their home, right? And I have seen so many of my clients having their homes paid off. And then I feel that it's not a good idea. I would always leverage it because the interest rates, number one, the mortgage interest is a tax deduction. Number two is you have a cap on that mortgage, right? Like you have the cap on the mortgage interest. So let's say you're borrowing at 7% or maybe 8%. After tax, your borrowing is only at 4% if you were into a 50% tax bracket. Now, the question is whether your money can make more money invested outside more than 4% or not.
Right.
That's the question. So usually, historically, S&P has performed 10% year after year. So I would say even if you were to borrow and buy a property, or even if you were to borrow and buy and invest in the S&P or so, you are still better off rather than leaving so much equity in the real estate.
Sure. And how can they use 1031 exchange engine or vehicle to defer some of these taxes?
So 1031 is a really good strategy, right, to defer the gain, as long as you reinvest the entire sales proceed into the new property. And it has to be a like-kind exchange. It means investment to investment. There is another not so popular strategy available, which is called opportunity zone. So if you were to now comparing opportunity zone to 1031 exchange, 1031 exchange, you have to reinvest the entire sales proceed.
Right.
While for opportunity zone to defer your gain, you have to only reinvest gain amount rather than the
I see.
entire sale proceeds. So that's, but again, like, it's never ever one strategy fits all. So you really want to see what your situation is before blindly going into anything, whether it's 1031 exchange or OZ, or there are other strategies available for deferring the capital gains on the sale of the real estate. That is called charitable remainder trust, installment sale. So there are multiple things available. But one should look at carefully what they have and then accordingly put the puzzle together.
Get a guaranteed cash offer on your home from TradeMyHome.com, powered by Your Home Sold Guaranteed Realty. We provide upfront written offers at a price agreeable to you. Experience a guaranteed sell with a hassle-free, highest and best price sell within your time frame. Are you selling your home in the next 3 to 6 months? Text PAIR to 408-740-7400 for a free and no obligation professional equity appraisal report. For more information, visit TradeMyHome.com or call 408-740-7400. Remember, at TradeMyHome.com, your home is sold guaranteed or we'll buy it.
And do you think reinvesting these proceeds, or rather investing anything in real estate, is it beneficial for somebody to invest it in their own name, or is it beneficial for them to create another entity like an LLC or an S corp and then reinvest the proceeds into the market?
So for 1031 exchange, the requirement is that the same entity has to reinvest. So if you are selling the property as an individual, then you have to get the new property as an individual. If you're selling it under LLC, then the LLC has to do the exchange. So it's not only the property has to be like kind, but the individual or the entity who is selling this, they have to remain the same. Now, the advantage of forming an LLC for a real estate is number one is it's the protection of your other assets, and number two is it's a very, very fluid and flexible structure that you can put together with the real estate, uh, with LLC, because now you can have a Class A, Class B members. Now you have active investor, passive members. You can structure it any way that you want to. Like you can always say that, okay, the tax credit benefits will go to this members, the depreciation benefit will go to this members. So, most of these REITs and all that, they're LLCs because, this is the really a desired way of investing in real estate through LLC.
So, Amy, what mistakes do tech founders make with their real estate holdings?
I would say that there might not be mistakes, but there might be a lot of surprises that can come into the picture when you buy this real estate, right? And especially here in the Silicon Valley. Like one of the things that I have noticed for past several years is that, people buy the expensive piece of real estate the first year, when they buy it, the property taxes might be very low. But then the next year, when the assessment happens, then the property tax reassessed at the fair market value when they bought the property, they get a huge surprise on the property tax bill. And at that time, they might have cash available, they might
Sure.
not have cash available.
Sure.
So many times it has happened that, my client bought a very expensive piece of real estate with obviously selling a lot of RSUs and all that, realizing a lot of capital gains, short term or long term. And then, like, come tax season or come tax deadline, they have to pay not only the property tax, reassessed property tax in April, but also the income tax on the gains that they realized and utilized it to buy the real estate. So that's number one of the surprises. The second is also that the entire mortgage, the homes are very expensive here, right? So the loans are always 2 million, 3 million, but only 750K amount of mortgage interest is deductible for federal purposes. So now it means that the rest of the mortgage or the rest of the mortgage interest, they are coming out of their pocket and there is no tax benefit to it.
Right.
So eventually everything in the long term might work out, but these are the few hiccups that usually they might find it
Sure.
on buying these properties.
A typical problem homeowners have when wanting to buy a new home is whether to sell first or buy first. Either way is risky. When ready to look for a new home, TradeMyHome.com, powered by Your Home Sold Guaranteed Realty, offers an upfront guaranteed cash offer on your current home. Are you moving in the next 3 to 6 months? Text PAIR to 408-740-7400 for a free and no-obligation professional equity appraisal report. For more information, visit TradeMyHome.com or call 408-740-7400. Remember, at TradeMyHome.com, your home is sold guaranteed or we'll buy it.
And how can families use real estate to build multi-generational wealth, and that too tax efficiently?
There are so many families who have been doing this. And, there are live examples to this. People buy the real estate and then, they leverage it again and they buy the next one and then buy the next one. When you inherit a property, you get a step up in basis. Now, that's number one advantage. Now, it means that, your mom might have bought a property for $100,000, but now it's $1 million or $2 million property. Plus, you get the base to pay the lower property tax also. So, twofold benefit. Number one, step up in basis and the lower property tax base. So, you can continue to build upon that and then generate a good amount of wealth. I have several clients who inherited the multiplexes. A lot of people form a family limited partnerships to divide the real estate and then get the fractional appraisal to their interest and then pay a lower amount of estate tax as well. So or just have a lower basis to their interest. I believe the families can really build a significant wealth using the real estate and very, very tax efficiently.
So what changes do you see coming to taxes with this big, beautiful bill?
So the big, beautiful bill is a mystery right now. They're just going through everything. And then there are a lot of good things in there. Number one is that there is a good amount of bonus depreciation. The bonus depreciation is coming up 100%. They're also talking about increasing the tax rate for the high income individuals. And also the limitation on the SALT deduction could be increased also. So there are a lot of things in the works right now, and they're exciting. And we're hoping that it will turn out beautifully for many of our clients.
Please share this episode with a friend, subscribe, and leave us a review. Thank you to our sponsor, TradeMyHome.com, for their client commitment and for making this podcast possible. If you are considering buying or selling a new home, visit TradeMyHome.com. Until next time, remember to stay ahead in the real estate game.